Introducing the Lightbulb Series by Valkyrie Investments, where we cover crypto topics requested by you in 5 minutes or less. Today, we are looking at the digital asset ecosystem. Let's get started.
Hi, my name is Sean Rooney. I'm a vice president and trader at Valkyrie Investments. And one of the most common questions I hear from people that are interested and new to crypto goes something like this. I've been reading about crypto and I want to get involved in some manner, but there seems to be so many projects, thousands of projects. How do I differentiate and decide between so many? So it's a good question because just like in the world of traditional finance, there are plenty of options to choose from, and there are different reasons why someone might choose one project over another. Therefore, it might help to come up with a model or an analogy for the crypto landscape, or maybe crypto economy might even be a better phrase. The following model has been circulating for a hot minute, and I first heard it from Michael Saylor. Think of an office building. For this exercise, let's break it into 4 parts. There's number 1, the land or the property. Number 2, the currency used to transact for the land or on the land. Number 3, the actual building or a platform for people to work from. And then finally, number 4, you have companies that go to work in the building. So if we take those 4 parts and we lay them on top of the crypto economy, we can start with land or a property, or in this case, it would be digital property. The most robust example of this is, of course, Bitcoin, as it has the largest market cap. Similar to land, it has a strong element of scarcity, a long history, and it's built for durability over time, we can say. Bitcoin, like land, is a store of value. So that's one example of that. For the currency used to transact on the land, on the digital land, we have digital currencies. Cryptocurrency is a bit of a misnomer as an overarching name for all of the digital assets. So for this example, we can go with digital currencies, which we've seen with the rise of stable coins like Tether or USDC, or even central bank digital currencies down the road. They are great for transacting. The rise of stable coins has been an important development because they've alleviated the pressure on Bitcoin to be the main on and off ramp to the world of crypto. If we're moving on, we have the buildings that go on top of the land, and which in our analogy would be the digital platforms. These are blockchains that serve as a host for creating applications, which we'll get to those in a moment. Examples of digital platforms would be Ethereum, Polkadot, Algorand. So buying those tokens is in a way similar to investing in a digital share of that particular platform. And finally, the reason for the office building or platform is so that companies can work there. And this is where the digital or decentralized applications enter the picture. They benefit from the overall security of the platform without having to build out their own infrastructure from scratch. Examples of decentralized applications cover a lot of ground, from decentralized exchanges like Uniswap to potentially insurance products or even your NFTs. In some, we have land or digital property like Bitcoin. Then there is the currency used to transact, which is the digital version in the crypto space being stable coins. Next, there is the building or the digital platforms. And finally, we have companies that work in the buildings or for the decentralized applications. There's the basic layout of the crypto economy, and I hope that's helpful.
Thanks for joining us today. If you want to learn more about something in the cryptosphere, please reach out to us at lightbulb@valkyrieinvest.com. You can also find us on Twitter, Instagram, LinkedIn, Facebook, and YouTube. The opinions presented herein are solely of the individual and not necessarily representative of Valkyrie Investments, Inc. and their affiliates. There is no guarantee that any specific outcome will be achieved. Investments may be speculative, illiquid, and there is a risk of total loss of your investment. Past performance is not indicative of future results.